In the last couple of videos, I talked about how the US midterm elections was going to probably cause Bitcoin and the entire crypto markets to pump. I also gave you guys exact entries to get into if you want to make some money over the next couple of months during Q4, where I believe that the crypto markets are going to be very, very bullish. Now, this video, I'm going to give you two other data points that will support this claim. I will also give you an updated entry where you can get into Bitcoin at a potentially better price, as well as all your other altcoins as well. And if you stick around to the end of this video, you will also receive a bonus coin where I believe will absolutely kill it heading into November. And more importantly, I'm also going to talk to you a little bit about DeFi and why there is a huge opportunity within there. If all of that sounds interesting to you, let's get into the first data point that I was looking at, and that's going to be the DXY. Now, for those of you who don't know, the dollar index, or otherwise known as the DXY, it basically signifies the strength of the US dollar compared to everything else. Now, here is an interesting data point that I want to show you. Basically, every time the DXY goes down, now I want you to take a look at the date here, right? This is the beginning of 2017 and it ends at the beginning of 2018. Now, if these two dates sound familiar to you, that's because that is the date where the Bitcoin 2017 bull market began, and that is the date where the 2018 bear market began, right here. You can see that right here at the beginning of 2018, Bitcoin basically just started going down and the entire crypto just went into a bear market, basically. Now, just to give you another example to show you that this is not a fluke, I want you to take a look at the date here, which is March 2020. DXY starts going down until the beginning of 2021. Or rather, when DXY starts reversing again, it is at around the end of August 2021. Now, let us go over to the Bitcoin chart and I will show you when the 2020 bull market began. As you can see, the 2020 bull market began here and it stopped at August 21. So August of 21 was pretty close. But you can see that the majority of the Bitcoin move started when the DXY started going down. So the reason why this works is because the DXY, you can think of it as the US dollar. Bitcoin is valued against the US dollar. So you can imagine that if the USD is going down, it would make sense that Bitcoin's going up. And this stands true for basically every market out there. Whenever the DXY goes into a downtrend, the stock market tends to perform very, very well because stocks are valued against the USD. When the USD is strong, it encourages investors to put more of their money back into USD because, well, number one, everything else is going to suffer. But number two, when USD interest rates go up, which is what we're seeing right now, you tend to get a lot of rewards for keeping your money in USD. Rewards that come in the form of an appreciating asset plus, well, basically just more interest rate payments out to you as the investor who chose to invest into these government bonds and the USD. Hopefully that did not go over your head. But the reason why I bring up DXY and why this is so important, because currently, if you observe the DXY at the moment, it has literally been going straight up for basically, well, since middle of May of last year. So for the last 1.5 years, we have literally just been going straight up. And if you take a look at this, this is a parabolic curve. Now, this is really, really interesting because if we lose this parabolic curve, the first key level is going to be right here at about 101 points. Now, before I get into how I came up with that number, let's actually discuss why I believe now is a good time to talk about the DXY and why it might be going down. Now, if you take a look at the DXY, I'm going to have to go back onto TVC to show you this, but I want you to take a look at back all the way back to 2002. You can see that this swing high since 2002 has not been broken until very, very recently, right here. And to those of you who follow this channel, you know that we give you an analysis based off of the market maker's perspective. Because even though retail trading sort of kind of works, we know market maker trading is just so much better in terms of effectiveness. And why is that? Because the market makers are the ones who move the market, and it would be a very good idea for us retail traders to trade in accordance to the market maker's bias. So I also want to bring your attention to these two blocks over here, which is order blocks. These both are bearish order blocks over here. And you can see that price has recently just came into the bearish order block after taking out a key swing high from 2002. That is 20 years ago that we took out this level. And this would make sense that it might start going down now. Now, why do I say that? Because I want you to think of the market as a Ferrari. And in order for the market or this Ferrari to go up or down, you need liquidity. So liquidity is sort of the fuel that allows this Ferrari to move around. Now, usually, key points of liquidity on the chart can be spotted based on swing highs and swing lows. So beneath all these swing lows right here are liquidity. What is liquidity? Basically, it's traders placing their stop loss, let's say beneath this level, because they think that this is going to be support and price is just going to bounce right off that level. For example, this could also just be, well, think of the last time when you got into a trade. If you, let's say, went long over here, where would you place your stop loss? We've always been taught to place our stop loss beneath the recent swing low. So the market makers have access to all of this data, and it does not take a genius to spot where most people might put their stop losses. So this is what I mean by liquidity. So it would be in the market makers' best interest to, after taking out the liquidity all the way back from 2002, now look at all these juicy points of liquidity down below here. And it just so happens that price has been moving in a parabola as well. So price has just been going straight up without any moment for the market makers to come down and clear out the sell side liquidity. Basically, anyone that basically went long at any of these points here would have gotten a free ride up all the way to the top. And this is what the market makers hate the most, because when you win money as a trader, the market makers have to pay you out of their own pocket. And it doesn't, again, even idiots would understand that the market makers, the reason why they are in business is to make money. So it is in their best interest to make sure that you lose money. Now, that was a really in-depth explanation on the DXY and why I'm bringing this up at this moment. But if you have been listening to me for the past 5 minutes, you should also understand how big of an opportunity is presenting itself on the DXY right now, because it's just about, I think that there is a good chance that it might lose the parabola within the next couple of weeks. And this is adding on top of the fact that we have a data point to suggest that every year during the midterm elections since 1942, October has always been the month where every major asset class has found its bottom. That includes stocks and that includes crypto. You pair this up with that, right? This is data dating back to 1942. So that's 80 years of data. Now, again, history might not repeat itself, but it often rhymes. So it makes sense that the probability of October being the bottom is going to be much higher than us continuing to go down below for crypto, especially in Bitcoin. So before I get into how this will apply to crypto, let me just discuss with you how I came up with that level over there. You can see that if I draw a fib from this point right here to that point, this is a macro range. Beneath the 0.5, this is the first swing point. Now, whenever you are looking at a macro range, it is very important to understand that about 80% of daily trading volume is accounted for by algorithms. And the main purpose of these algorithms is to keep the market in a state of equilibrium, basically in balance. So this also means that if price stays in a premium for too long, they want to bring it back down to equilibrium around 0.5. If price remains in a discount for too long, they will want to bring it up. So when price is high, when price has been trading in a premium for way too long, you can imagine what happens next. So this is the first key area for the market makers to target. The price loses the parabola. We're going to likely see the next probably 3 months to 4 months play out in a very bullish fashion for Bitcoin. So how is this going to affect Bitcoin? Well, I'm going to get into that. So with Bitcoin, if you have been watching the videos that I've been doing lately, you will know that I'm pretty much banking on the fact that Bitcoin is going to hit 21K basically next month. And after that, given that the DXY might be on a downwards trend from then on, then we could expect something like this to happen for Bitcoin, where it takes out 21.21K, retraces a bit, and it goes up to fill in this 4-hourly or bearish order block, which is not very significant in the grand scheme of things, but you will fill that, and then you come down a bit, and then you target 25K, and this will happen before December. So basically, within the next 60 days or so, I think Bitcoin will be back at a point where we are at 25K. Now, I don't want this to seem like, AOC is just shilling the fact that crypto is going to go back into a bull market. I hope at this point you will see that I'm presenting a bunch of data points to support this theory. Now, I'm also going to give you another one. This has nothing to do with Bitcoin, but it does have a lot to do with altcoins. We're going to take a look at the altcoin perp futures on FTX. You can see that currently we have some sort of inverse heads and shoulders forming on altperp, which basically is just a bucket of a ton of altcoins. And if this performs well, it's almost like you're taking a look at total 2, which is a measurement for how altcoins are doing. And it's the same story here. So altperp is just a way for you to be able to invest into all of these altcoins at the same time. Basically, you go long on altcoins rather than picking out every altcoin one by one. So for the more conservative investor, this would be a really good choice, because number one, not every altcoin performs the same, but number two, you can mitigate your risk a lot by investing into an index compared to picking out one coin by one coin. Now, not only that, but you have a trend line over here, which looks like, honestly, is going to break out to the upside. Now, I hate the word breakout, but this is a very simple way for me to illustrate the idea to you guys. Now, the reason why I bring up trend lines is because basically, remember how I talked about liquidity earlier? There is a swing low here that has just got wicked out recently. So basically all of these traders' stop loss has been triggered. So it does not make sense for whenever you see a situation like this, right? Whenever you are, this is a pro tip by the way, whenever you are trying to figure out if price is going to go up or if it's going to go down, what you do is you look at the chart. Where is the liquidity? Since the markets always move based on where the points of liquidity are, would it make more sense for price to dump all the way down here to take out this swing low? Or would it make much more sense for price to go up in order to take all of these juicy swing highs right here? And you even have a fair value gap right here, which is a gap in liquidity. And remember, whenever there are gaps, means the market is not balanced, right? Gaps are imbalances in the market, and the algorithms would always fill in these gaps because they want to keep the market within balance, right? So not only that, but you have my target right here, which is 2,400 points for this index, which is about 30 to 40, about 40% up from this point onwards. Now, relatively equal highs, every time you see two highs or two lows in a relatively equal area, these are known as this is the market maker's wet dream, because retail traders are going to look at this and be like, oh wow, look at how many times the price got rejected at this area. This must be really strong resistance. I am going to short this place, or maybe I'm going to put my stop loss above this level. And at that point, the market makers are going to be like, ho. Please do. And here's the second problem that comes in with retail traders and why I want you guys to stay away from retail trading. Because retail traders are basically taught when resistance is broken, price is going to keep shooting up, because while resistance has been broken, the market makers know this. So what they're going to do is they're going to just wick the price up. And the reason why it goes down is because all of these dumb traders are going to go long above this level. And when the moment they bring the price down, then all of these traders are going to get stuck. Basically, if they don't get liquidated or get stopped out, well, basically they're going to lose their money. So if that reminds you of what you're currently doing right now, don't worry, I've been there as well. Hopefully this video will give you a lot of insight into what not to do in the future. So let's take this all the way back to Bitcoin and figure out the exact entry that I'm looking for. So back then I said that this would be the ideal entry right here, but currently there is a chance that the market makers might not give us that kind of an entry, because this is honestly beautiful. If the market makers fill in this whole fair value gap over here and then bring the price back into this 1 hour bullish order block, then this would be really efficient delivery of price, which I just doubt the market makers are going to do. So while this might be the best entry at the moment, I think that we might have to settle for a suboptimal entry, which is when these equal lows here at $19,090 are taken out. I believe that we will have the opportunity to go long on there. But honestly, I would just be patient and perhaps scale into Bitcoin. So I will get some here. I'll also get some at this low right here after it's been taken out, because if you've learned anything from this video, it's how to spot the levels of liquidity. And in this case, there is a level of liquidity here at 18,990. Now, frankly, this is not particularly far away from this level. So just pick one of the two. Personally, I'll start scaling in here. And then I will scale in again at the 0.5 of this fair value gap, because, well, it's a lot of advanced concepts I've talked about already, but consider this entry at the 0.5 at about $18,700. That is going to be my second entry. And my third entry is, of course, going to be 18,500, as I've talked about in the last video. Either way, I think that just based on the data points and just looking at the probabilities, it's much higher that Bitcoin just comes down and then well, just basically turns bullish again. Of course, nothing is confirmed until it is confirmed, so watch out for that one. Now, listen, you can watch as many of these videos as you want, and chances are you're probably going to make some money. But the truth of the matter is that the people that work with me one-on-one get 10 times the results in 1/10 of the time. Having someone to push you and guide you in the right direction will likely be the missing piece you needed all this time to finally find success with trading. If you want to work with me, I'm actually about to take on 20 people into a high-level mastermind where I will work personally with you to take you to a point where you can make an extra 5k to 10k per month trading regardless of your account size. If that sounds interesting to you, I want you to shoot me a DM on Twitter at _theartofcrypto, and we'll see if we're a good fit for working together. However, don't take too long to decide. I started talking about this mastermind last week and I already have a few spots taken up and a few spots under reservation. But anyways, now to get into the bonus coin that I've been talking about just now. So this coin is going to be called CHZ, basically Chiliz. Now, I want you to take a look at this pattern right here. You basically have an inverse head and shoulders right here. Now, the thing about CHZ that piques my interest is the fact that CHZ is primarily a coin that is involved with soccer players. And I believe that the FIFA World Cup is quickly approaching. And there are rumors floating around in the air that Chiliz might be thinking of doing something, maybe getting on a promotion or advertisement or whatever. Either way, this is a piece of news that brings a lot of attention to CHZ, or at least I believe so. So CHZ is on a list of one of the best coins that you can probably get into heading into November. And to talk about the exact entry, well, let's just say that this order block right here on the daily chart has already been filled and you bounced really hard. Now, we talked about this order block inside the private Discord group. If you guys just want to get access to all of the trades that I'm taking, as well as all the latest market updates, as well as just follow along with my analyst trades, you're highly going to want to consider the private Discord group, which will be in the link in the description box below. But anyways, that first entry has been taken. So now we have to look for an alternative entry. Now, what I currently believe is that if Bitcoin does take the leg down before going upwards, then I think that this presents a really good opportunity for us to get in to CHZ. And I will also give you guys the target as well. Basically, if you draw a fib from this low to this high over here, you can see that the 0.618 and the 0.705 comes somewhere within this area. This is known as the golden pocket. Now, that just happens to be some kind of a value area at around this zone. So what I'm going to look to do is narrow it down all the way to the 15-minute chart. And then I'm going to put this value area and I'm going to give you the exact target and the exact entry plus the exact stop loss for this trade, which is going to be roughly around something like this. And since we are targeting these highs over here, in fact, I haven't really thought much about the target yet, but the entry is going to be somewhere around 0.1715 with a stop loss at 0.1700. Again, this is just my opinion on what I would do if I was presented this, opportunity. Again, this is just an example of what I would do based on my trading knowledge, so please do not take this as gospel. But anyways, the two targets for this trade is going to be first one at 0.2086, which is at this supply zone over here, and the second take profit target is going to be over here at 0.2305, which is going to give us about 40R, which basically means if your risk is $100, for every $100 that you put into this trade, you're going to get back $4,000 by the end of this trade. If you want more entries like this, consider joining the private Discord group. For now,